Alrighty, guys. Alrighty. Let's just kind of get a very slow start today. But I thought I'd come on here again every week, every fortnight, and come on every Sunday to have a chat. Have a chat about the week, have a chat about trading setups, have a chat about anything really related to trading. So if you hear from the Discord, hear from Telegram, let me know in the chat. And this is also an opportunity for people to ask questions. So you might be from my Discord, you might be from just YouTube watching. Welcome, guys. Welcome. This will be something I do every week, every fortnight. I've got plenty of time now being injured that I've got the time to do this. I'm not out and about as much anymore, so I'm happy to give back. And we just reached 8,000 subs, which is crazy to think about. Crazy to think about. You know, a year and a half ago, I think, or 2 years ago, whenever it was, I think it was around October in 2023 is when I started the channel. And since then, we've just grown crazily. So I do appreciate all the support, the continued support. You know, what started for me, YouTube, as creating videos for myself, just to teach myself, turned into creating videos for other people that hopefully you guys appreciate and you take something from. That's the whole goal for me with the channel. It's to make content that's easy to understand, that you can apply to the market, and that you're able to utilize. That's the whole goal. So yeah, I thought today we'd break down the week. We'd go through, some trading setups. If you guys have questions, post them in the chat. Let me know how your week went. Let me know if you want to review any trades. Happy to do that too. I thought that'd be a good opportunity today to do that. And let me know where you're from as well, because I know we've got some people that are from across the globe, some regulars. Let me know in the chat, and then we can start from there. So not too sure how long we'll be for today. I'm assuming at least an hour. These seem to usually go for about an hour to two. And then for anyone that's joining later, you might be watching this, or for those that are joined a little bit later, this will be recorded, so you don't have to worry too much about that, which is fine. So here in Australia, it is Sunday. For some, if you're from the States, if you're from America, it's probably not, right? It's probably Saturday still. It's the afternoon or night time for you, depending where you're from, or morning, depends where you're from. But today, let's break it down, right? So let me know in the chat, if you're watching this video, let me know what session you guys trade the most. I just want to get a gauge on who we got here. Let me know in the chat. What session do you guys trade the most? Is it New York session, AM, PM? Is it Asian? Is it London? Let me know. Because we'll start with that session first. I want to go through everything. And then also, if you guys have questions as we go through this, happy to answer as we go through as well. This right now, we're just in the 1 minute chart. So we'll start there. We might even go to the 15 for now. What a week. I think there's been some good days and some bad days in the markets. London. We got the crew here. Michael, yes, cool. Brian, yes, cool. Got a few Londons, a few New York AMs. Let's do London to start. Then if you trade other sessions, still post them in the chat. We'll go through that. I'll do a video coming soon. The last video, I don't know what happened there. It just blew up. Don't know if you guys have seen it. It's just my monthly review with Top Step. It blew up, and a lot of people are asking for data collection videos. Heaps of people have asked me, how do I collect data? So I'm making one. I'm planning it behind the scenes at the moment. And so it'll be coming probably tomorrow or the next day. I'll record it tomorrow, New York PM, and then I'll post it early in the week. So that's something to look forward to as well. But I like making those videos. I like keeping you guys up to date with my accounts. I haven't really done it in the past. I've just, more so produced the education, but it's a side of trading, showing stats, the wins, the losses. I don't always have a green streak. This month's just been very good. That's a part of trading, and I'll keep you guys updated with that too. And I've got a little side project that I'm working on that when it's complete, which should be in the next month or two, I'll make a video on that too. But that's something else. Anyway, let's get into it. So we're going to start off with the London session. We're going to talk through the week, how the week projected. Then we'll do some New York PM, New York AM, because I think there's some good things to talk about in those regards. And as I do this, if you've got questions, just post them in, right? This is an opportunity as we're going through things to post them in. Now this week with the Discord, I was live 3 days a week for the Zoom session. One of the days, I believe there was 2 losses, 2 wins. The other 2/3 were actually not too bad. I'm pretty sure they're just winning days, but we'll start from Friday. Now, when you look on a higher time frame right now, all I am on is the 15-minute chart. And heaps of people ask me this: which time frame do I use to find my daily bias, to find my narrative? I start on the 15 always. The 15 gives you narrative as to where the market's delivered from, and also where the market could deliver to. So it's really important. Where's the market delivering from and where the market is delivering to? Now, when I'm looking at this, and we'll start with Friday. I believe Friday was here, wasn't it? This was Friday here. Yeah, 2 days ago. Cool. So this is where price is. Look, price is here. That's where we're sitting. Now, I zoom out, and the first thing I always like to see is where are we sitting in the bigger range. It's always the important part. So I see this swing high here, boom, mark that out. And then I see these swing lows down here, or that swing low. And this swing low, just so you know, this was the low formed. I think it was the same day. Let me just double check. The day after, yeah, the day after we had the contract change. That's this little gap here. Obviously, come back down here. That's the day after. It's very sharp. So when I'm looking at dealing ranges, I like to see sharp lows, ideally, and sharp highs, but I still will mark it out if it's fairly smooth, and I'll show you what I mean. So we've got that swing low there. We've got the swing high at the top. That's the range we're working in. That's the big range. And obviously price, we've stepped up like this, and now we're stepping back down. To put it simply, when we're in discount, I'm looking for longs. When we're in premium, I'm looking for shorts. That's a basic rule of thumb. So if I grab out my Fibonacci and I mark this out like that, I'm looking for longs. And if you're trading New York session as well, hopefully down here looking for longs. Hopefully you're looking for longs. Why? Because we're in a level of discount. And again, that's just how I trade. There's always going to be a winner and there's always going to be a loser. So on some days, I might look for that and it doesn't work out. Other days, I'll look for that and it does work out. It's all a balance in terms of trading. Welcome, Liquidity King and Amino FX. Welcome. So I'm looking at the market here and I'm thinking, look, we're below 0.5 of the range. The London session's coming up. So for me, I trade Asian London, even outside of London session sometimes too, and the opening range. But with the Discord, it's the London session. Now, I'm looking at this 2 o'clock open, or, if we look at that, that's roughly about here. I'm not looking to short to these lows. Why am I not looking to short to those lows? Because at these lows, there was actually SMT. So on the NASDAQ here, we're making higher swing lows. And then have a look on the ES chart. We'll just get this up on the side, just so you can see exactly what I'm talking about. So on the 15-minute chart, it's pretty obvious there. Look at that. Look at those two lows. So New York session, PM session on this day, I think it was a PM session trade here. That's a clear long. SMT in a level of discount below 0.5, that's a clear long. But because of that SMT, I'm not looking to short NASDAQ to these lows. I'm not looking to do that. I'm also looking on this day, which is what we talked through, is for price to do that and then do this. Again, it starts from that big picture. Boom. We're in a level of discount below 0.5. We have SMT the lows. We've got all this liquidity resting on the buy side. We can't keep going down forever. We can't keep going up forever. Obviously, these are all-time highs. So once we do that, I'm now looking just for some impulse that makes sense. If we now drop back onto the 1-minute chart, and I'll talk about a few things here. You'll see, right, as we play the price out, as we get closer to 2 o'clock, interesting things do happen. Now, there's actually a nice long here in this macro and in this macro here too, but we had to make use of a continuation framework. And sometimes it's how it is. Sometimes you get to the chart and this is where the chart is. And you go, wow, I didn't catch the original movements. I didn't catch that bottom of the market. And sometimes it's how it goes. So now you have a decision to make. And that decision is, do I still have a clear draw on liquidity? Can I still take a trend continuation, or am I too high up in the range and is it not worth it? And that decision is a personal one, but I'll show you why I came to the conclusion of actually looking for the long still. So here we go. The macro is coming up. I'm going to mark out the macro with 2 vertical lines. So we'll start this at 150 and we'll start this over here at 210. Boom. Now I think to myself when I go, well, what would I want to see the macro do if we're bullish? Well, I want to see the macro push. The macro expands. Which side do I want to see it expand to? Well, up. Why do I want to see it expand up? Because we already have that that analysis from beforehand. So looking at the market, we've got all this low resistance. We've got all this liquidity. We're below this black line, which is the big range. We're in a level of discount. We've got so much buy side liquidity. We've also got SMT at these lows. The NASDAQ here forming higher lows, great. And going back to the ES chart on the 1 minute chart, have a look at this. And this is where it all comes together. I think it is, where is it? Over here somewhere. Let's go back. Back a little bit more. Right there, look. Look at that. Lower lows, higher lows. So by this point in time in the NASDAQ, it's longs. It's always longs. We see we need to find somewhere to enter from. So I'm waiting for this fair value gap that's been used before to go lower. I'm waiting for that to be inverted. Once that's inverted, there's a long that I mentioned to the Discord. It was right here. Boom. That's a long right there. So this day was quite an easy day, one and done. And after that, there was a losing idea, but that came after the winner. In reality, once you take a winner, you don't take another trade, right? And then we just kept going up and up and up and up, and then we chopped and chopped and chopped. Now you look at this. You look at this framework, and if you look in the 15-minute chart, look at what the candles look like. Look how impulsive they are. If you miss that, and here's a good word of advice for anyone too listening in the stream. If you miss that trade, you have missed the A+ setup. You've missed it. And I remember telling this to my Discord. I said, that is the setup. So anything here on is not going to be as good. And it wasn't. There was one other trade I mentioned, which was a losing idea. And so this is the important part. If you miss that, you miss it. It's as simple as that. So if you decide to engage the market again, you have to appreciate that what you're engaging is not going to be as good. It's a hard pill to swallow sometimes because maybe you had commitments. Maybe you had something on. Maybe this move happens in Asian session, but you don't trade Asian session. You come to London session, you're thinking, well, what do I do now? Well, you got options. You got choices, right? Either don't trade or reduce your risk. But if you're taking a trade after this and going, yeah, I'm just going to keep going, it's going to be just as good as this trade. It's not, because this trade already pulled back into the range. This trade already formed big SMT. This trade already swept that low resistance. It's already done exactly what we expected it to do. And that's an important point. Sometimes you miss them, right? So that was Friday. Friday was quite a decent day. Let's go back to the previous day. And if you guys have any questions about this, post them in the chat too. Happy to answer out. But that was Friday. So Friday was quite a decent day. And all we've been doing really, like even if you trade the New York session, doesn't matter what session you trade, for multiple days, look, that's the range. For multiple days, literally all we're doing was stepping down, pulling up, stepping down, pulling up, stepping down, pulling up. But we can't keep doing that. And the same goes up here, right? This is like a market maker model. You hear that word, you hear those terms. It's just a fancy little name for the market moving up, turning, and the market moving down. And while we're on that topic, I'm going to mark some things out. Look at this, right? These boxes are accumulation boxes, right? It's where the market stops printing aggressively. This is like a stock standard market maker model. Now, notice how we swing between premium and then back into discount and then back into premium. That's what it looks like. And then in between each of these phases, there's an expansion leg. So on the way up, obviously we expand up. You try to catch the expansion leg up, and in this case, you try to catch the expansion leg down. But can you still trade in the accumulation? You can. You actually can. You just need to be more nimble. So obviously this week for New York session at 9:30, it's happened many times, right? Look, this day here, 9:30, you could pretty much just press sell. Here, 9:30, you pretty much just press sell. Over here, it was a bit earlier, right? So a lot of the time that happens, like New York session will be the one that moves, and you can see it here too. Look, 10 o'clock, it starts moving. Over here, it's about 3 o'clock. Over here, you've got, PM session, but a lot of the time it's New York session that has those big moves. And if you ever see this pattern and you're in New York session and you see price slowly pull up like that, it's probably going to sell off. And if it's done it once, it's probably going to do it again. But once we're deep in a level of discount down here, the chances are that we could now swing back up like this. And we could go like this and back down, or we could do this and just keep moving high. And then again, all-time highs. So you can see how this works. You can see how the market maker model works. And it's just the structural elements. So I wouldn't look too far into it. I'm not going to name any names. I'm not going to name any creators, but I don't think there's a need to get too in depth into the markets like you might think. When I first started trading, it was all about, oh, let me try to figure out Enigma. Let me try to figure out the algorithm. It's not necessarily about that. It's about finding a system that repeats, that you're comfortable trading, and consistently trading that. That's what it's about. Yeah, if people want to go in depth and do that and it works for them, do it. But if you're not finding success and you're feeling like it's because you got too much information, you probably do. You probably do. And that's just a word of advice. I'll talk more about that in the data collection video I make. But let's move on to New York session. Let's do it, right? Let's do New York session on this day, because this day was actually quite decent. Look at this, right? We talk about macros, we talk about ICT. We zoom in a little bit, just so you guys can see. Now, I want to point out a few things. Over here, this is a macro. I'm going to mark it out. And I want to talk about a few things here. So we've got the macro from 9:50 all the way until 10:10. Now, you might have traded this if you trade New York. You might have traded this session. And if you don't trade New York, if you trade London session, it's still valuable. So I don't know if John's here. There's a few Johns in my Discord. There's a few, right? It's a common name. But John, the one that's been messaging me, if you're here or if you're watching this later on, he asked me about that data collection. And I told him it's really good, even if you trade the London session or the Asian session, look at other sessions, because structure is structure. Different sessions just have different volatility. I can trade Asian session with my model. I can trade London session. I can trade New York session. I can trade PM. I can trade end of day macro. I can trade at 6 a.m., 7 a.m. It doesn't matter. And that's the strategy that you want. You want a strategy that's flexible. A lot of people might find it hard if you're switching between sessions. That just means your strategy needs refinement. That's all it means. And it takes time, but after practice, the model should be able to, be applied to any session. So look at this, that's the macro. Now we could just go macro inversion. That's a really good way to do it. You can see, obviously, we've got an inversion fair value gap here. But what I wanted to talk about is, well, what if you took a trade before? What if you took a long here from this inversion? And what outcomes could you have had if you took a long from that inversion? And why might have you taken a trade there? And why is that still valid in my eyes? Well, let's go back down to the 15-minute chart again. Look at that dealing range, the same thing, right? Get rid of this, get rid of that. Where price is, if we have a look over here, we're in a level of discount. It's longs. I'm not trying to short to that low. When the market's been stepping down for so long, I'm not trying to short once the market's already been short for a long time. So it's a really important thing that a lot of people can't appreciate. If the market, say the market decided to go down here, who cares? If it's not your model, it doesn't matter. So you have to stick to one thing. A lot of people can't do. A lot of people think that if they see the market move 50 handles, if they see the market move 100 handles, oh, why didn't I take that trade? Oh, why didn't I take it? It was a macro. No, you shouldn't have. You should not have. If it's not your model, you don't take the trade. So it's a really big acceptance thing with trading, and then trading profitably is letting the market run, letting it go and going, well, it's not my model. That is a really important skill. So I'll go into a bit more detail into this as we go through. My model is a macro inversion fair value gap model, which we'll get into now for both New York, London, any session it works on. Alex, I don't necessarily trade live, but I do live market reading. It's live on Zoom. I'm not a signal service, but if people are from my premium and you're here, they would vouch that I don't give signals, but I'll give you the pretty much clear direction as to what I'm looking for. So for example, if it was New York session and I was trading New York, but I only trade London, right? It's only London, and I post analysis for Asian. But I'll be talking through the markets live, say for this framework here. And what I said to the Discord on this particular day, we hopped on, I think it was about 1:40 we hopped on. And I said to the Discord, I said, if we invert this spot here, then we're looking for longs. And we're going to be looking for longs to all these low resistance liquidity points. And nowadays, I even tell people, where I'd put my stop. So for example, here, once we form this candle, I say, that's the line in the sand. So I'm not trading live, but I am giving analysis because that's the way I like to roll. So it's a good way to do it, in my opinion, because that way people learn. and they're not necessarily relying on my signals, but they're using me as guidance. So that'd be 3 days a week for London session. So that's that. But yeah, that's that. And New York session, let's go into it. So New York session here, and I wanted to talk about this because a lot of people do trade New York. I don't trade it now, but I have. So if you guys have questions about New York, you can post them here. You can join the free Discord. You can ask questions in the questions channel, community tab. Doesn't really matter, right? It doesn't really matter. I'm open to questions because I've traded all sessions, so it's all good. 7, WAP is not opening in my region, so can't join the Discord. Can you share? I'll post my email in this chat. Send me an email and I'll send you a link. So we'll go from there. So I'll post that in the chat. But yeah, say New York session here, right? So let's just, go back. And to be honest, when I talk about data collection, when I make that video, this is what I did myself. So what we're doing today, this is what I also did myself in the New York session when I used to trade it. And I used to go back every day and do this exactly like this, narrate the markets. Even if you don't feel like you know what you're doing, you can still narrate the markets. You can still pretend you know what you're doing. You can still go, all right, on this day, price stepped down, 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 down. We came down here into the lower portion of this range from swing high to swing low. And notice here on my chart, there's 0 indicators. There's 2 lines on the chart, and I don't have to have all these things on my chart. It's not necessary. If it helps you, do it. If indicators help you, use them. If drawing all these lines on your charts help you, use them. If it confuses you, then don't, right? Then don't. And find a different system, find a different way to trade. That's what I recommend. So yeah, my strategy is using macros, right? Now, here's an example of where it cannot work out or it can work out, but risk management changes things. If you're entering along here, I like that. That shouldn't lose though. That shouldn't lose because the stop goes below the body. Some people, I don't know, some people might break even up here, or some people, when it comes back down, they're freaking out. To me, that is not like a failed idea. It's just that the market, unfortunately, wants to test you out a little bit. And you know what? Even if the price came down, it stopped you out, and then it did this, you just look for another trade. That's it. That's the secret. You're not going to win the first trade all the time. But if you trust in a model, and look at all this liquidity up here, look at all these highs. So much. So on this day, there was no SMT at the lows. I don't believe there was. Correct me if I'm wrong. I don't think there was at these lows. Let me just double check to make sure. Let's go back here to the New York session. So if we look at those lows, was there SMT? What day are we looking at here? 26th, 25th. All right, let's go back. Let's go back one day. No, so there wasn't SMT. Look, we still have higher lows. We still have higher lows here in the NASDAQ. So that trade, I like it. I like the longs from there. And if you got stopped out, or you kind of, what's the best way to say is if you got a bit scared, right, and you closed out for a loss, well, all you got to do is be able to come back, and you have to have that confidence to go, okay, well, my model's still present. We've formed another inverse gap up here, and you could even wait. You could wait, like you could enter again here if you wanted to, or you could wait and go, wait a sec, I want to see a bit more. And it's up to you. You could do something like that below the order block, or if you're confident, you could do something like that. And sometimes this will happen. Sometimes you get that trade that runs. Sometimes you get the trade that pulls back. Sometimes you get a mix of both. But my advice for myself, if I could go back, especially, and this could help you guys, if the drawn liquidity is still there, which it is, we've got all these highs there, then you have to have faith in your model. You have to have confidence. The only way you build confidence is by, well, number one, you got to accept that you're going to lose. If you can't accept losers, it's going to be very tricky. But you got to collect data, and that's why I'm going to make a video on that and the process I took and I still take to collect data. And it's a lot. It's going to be it's probably going to be a 20-30 minute video, but it's important because I think a lot of people maybe just don't put enough time into that, and they think that they can just take a screenshot of the trade here, put it in a journal and go, oh, I took this trade because of this, this, and this, and then expect that in 3 weeks' time, they're going to be confident. It's not going to be the case. You need a lot of analysis, And I just got the email too, so I'll respond to you after this call. Isn't this a prime example for a failed too early, not in macro inversion? Yeah, and on that point too, right? So I used to be really rigid. I used to be really strict. So the macro here is 950 to 1010. And obviously in this case, if you're really strict with the macros, you don't take this tricky trade. Nowadays, I'm a bit more flexible and I'll enter 5-6 minutes before a macro. For me, it does not matter too much. If the market structure is there and the macro is approaching and I think the macro is going to spool, I will enter that trade. Now, in this case, yeah, it would have been better entering inside the macro itself. But in other cases, there'll be times where you have to enter before, and if you don't, the trade will run without you. So it's touch and go, touch and go, Michael. That's a good point. Brian, I promise if you watch this playlist, you'll be profitable. Yeah, I think I've got a macro playlist on my channel, and I'm gonna probably do a bit more in terms of that, like playlist, and I'll put those out. Then I'll post that on my Discord, on my YouTube channel, just different playlists. But if you go back in my videos, for example, and you watch them, but not only watch them, but you apply them to your own charts, hopefully you learn a lot. Hopefully, that's my hope. I'm not saying everyone will, because everyone puts in different amount of of efforts. If you just watch my video, no, it's not enough. If you watch my video and then apply it to your own charts and do it consistently, it could be enough. That's what I'd say. Is it purely the time difference that you don't trade New York? Yeah. So for me in Australia, well, right now it's 9 in the morning, 9 o'clock. I was going to hop on at 10, but I decided we'll hop on earlier. Why not? For me, if I was trading New York, the open is 1:30 a.m. Or it might be, sorry, it's 11:30, I think, 11:30 now, but in the future, when daylight savings happens, it's 1:30. For some, that's not late. For some, people, they like staying up, till 1 in the morning, but for me, not really. So that's pretty much right. Yeah, I don't like staying up too late. I like waking up pretty early, 5-6 in the morning. Get up early, starting the day fresh, and then going to bed early. So that's kind of why I trade Asian and why I trade London as well. But I've traded every session. You can make money in every session. Like say here, right? Yes, New York session runs more, but this trade, your stop loss is 50 points. In London session, your stop loss might be 20 points or 10 points. So you just risk according to the session. You risk, half as much in the New York session or a quarter as much in the New York session as you would in London. And in London, you just bump up the contract size so you can make exactly the same amount, but you still get a good sleep. And you don't have to worry about other things. It's not worth, losing sleep, in my opinion, just to make money. I've tried and I've done it, and it's not worth it. It's really not worth it, in my opinion. But each to their own. So that there is New York session. This here is the PM session. This here is a really solid trade. It's a really solid trade over here. So I just want to talk about a few things. Remove this because I know some people trade PM. And again, post your questions away. I'll answer as we go through this. I'm going to mark this out. That's going to be blue. I'm going to mark this out. That's going to be red. Boom. Interesting. Now, have a look at this. The same inversion gap here that found support, we're trading back into that here and we're finding support again. That's important. We've also got a macro down here too, so I'll mark that out. This is like in an actual macro, this trade. So this is like perfect. We've got range high, we've got range low. We've got a fair value gap that's been using, price as support, which is great. And then we just have the impulse. We've got all this low resistance. We can wait for a few things here. You can even enter high up in the move. So you've got an order block that's formed here when we close above. We've got another order block formed here. You can wait up here if you want. You can do something like this. Put your stop below that order block or below that fair value gap. Give yourself a bit of breathing room because you've got so much to target on the buy side. You can give yourself that. And so that's another good trade, a macro-based trade. So my model, macros, inversions, and using dealing ranges, premium, and discount. That's the summary of how I like to trade, which is good. Yeah, for a healthy life. You'd be surprised. Obviously your function mentally is not good, But even just physically, how you feel is different. It's so different. The circadian rhythm, hormones, mindset, everything was affected. Everything was affected. So after doing that for a couple months, when I started learning, I used to trade London session, right? And then I used to go to bed in Australian time at about 10 o'clock. And then I used to wake up at 1:30 for open. And then I used to trade New York session, go to bed at about 3 o'clock, 4 o'clock, and then wake up when I was, working full time traveling at 8 o'clock in the morning or 7:30. Not sustainable. But I did it for about 3 months. So I did the hard yards, I put in the effort, I sacrificed quite a bit, sleep, friends, social life to learn the process, but it wasn't worth it. It wasn't worth it. So I'm glad that's done. Which macro do I mostly trade in Asian session and London session? So the ones I look at with the Discord typically will start with the London session. Typically for the London session, I look at 250 to 310 and 150 to 210. So I look at the two macros leading into silver bullet. So for example here, when was this? This was Thursday, I think. Yeah. So I look at this macro here. I look at 150 to 210. Right, and then I look at 250 to 310. Typically, sometimes I stay on a little bit later. So here I want to talk about this, right? This, I believe I wasn't on the call that day, but I just posted in live analysis. And actually on this day, I took a loss and I took a winner. So I saw price sweep out Asian lows. And this would be a trade I take every time. And one point I want to make out and mark out for everyone here is you've probably seen it and I've seen it. Every single time, and don't be that person. Hopefully no one here's that person. Your favorite creators, doesn't have to be me, right? Any person, if they post a win, everyone's like, oh, beautiful. And when everyone posts a loss, when anyone posts a loss, there's always someone that has something to say. There's always someone that has something to say. So what I'm trying to say, if you're starting a social media, if you're starting a Twitter, don't worry about people. Trade for yourself. And also don't worry about what other people are doing. Don't worry about what I'm doing too much. Like use it as maybe motivation or guidance, like learn from me. But focus really on what you're doing because you're the one pressing the button. So if I see someone else take a losing trade that goes against what I thought, it doesn't matter. Because at a given point in time, that person's going to be right and I'm going to be wrong. So it balances out. You just got to be neutral about it. I took a loss here. I'm happy to take a loss here. And I took a loss and a win pretty much very soon after. We'll talk about it. So these are Asian lows. We swept those Asian lows. Every time we sweep Asian lows, I'm looking for a reversal. Simple as that, especially if there's a macro. It's just a stock standard framework I look for. It works out more than 50% of the time. So I'm going to take it all the time, pretty much. So we happen, we're in the macro. Price inverts this space here. And I believe I went long somewhere from here. And I got stopped out here because I trailed my stop. So I was doing something like this, I believe. I may have gone long on this candle. My stop started there. I trailed my stop loss somewhere here and I got stopped out. So when price did this and when price failed, and here is the key, price failed to expand higher in the macro. That means something to me. That means I'm wrong. And I was, right? I was wrong. So I took a loss here for $200, 200. And I was like, okay, let's take another trade. But I had to flip my bias here. Now, flipping bias is something that you shouldn't do often. I don't do often. But in this case, because we did not expand straight away like I was looking for price to do, I wanted price to do that. And because after sweeping this high, we rejected, to me, we're moving much lower. And where could we move lower to? Well, again, let's go back to the 15-minute chart. Just so I can show you guys exactly what I mean. Look at this. So where I took a loss is right here. That was after sweeping Asian lows. But notice how underneath Asian lows, we've got this. And price did not tap into that when I took my trade. In hindsight, I should have waited, yeah, but I've seen it happen before where you don't tap into it, so I took the trade. Now, below that, we've also got these fair value gaps, these 15-minute fair value gaps here. And this gap was the one that we actually ended up reacting from. So, if I play price out, these are two bullish gaps. You can see what price starts. It's not rocket science. It's not magic. It's just a repeatable pattern. And you can see how 15-minute fair value gaps act as support and resistance. That's another point. That's another way I like to trade. So yeah, in hindsight, I could have waited till price dug a bit deeper into a level of discount down here, but I didn't. And so I took a loss. And, I posted this on TikTok and I showed my premium community. I took a loss, right? Now, once I took that loss, I waited. And as soon as we formed this order block down here, I flipped my narrative because now the market turned its hand to me and said, wait a sec, Ruben, we're not actually going higher just yet. We probably are more likely going into that bottom fair value gap down here. Now, because I took a loss, I didn't just go, I'm going to hold all the way down there. No, I took a loss and then I took a win. The loss was 200, the win was 400. I made $200 for the day. That's it. That's done. So sometimes I lose. I don't always win. Like, yeah, I've had green days on these accounts, but I take losses. But it's about how you come back from the losses. And can you come back from the losses? You could have waited. In hindsight, to be honest, I probably would have preferred waiting until this, but I couldn't be bothered. I had things I wanted to do. I was busy. I was recording videos. So some days, because of life commitments, because of things you want to do, you don't necessarily want to wait for 3 hours for a trade or 2 hours. So I took that short. I took that long. That's it. But down here, there was also good longs from this 15-minute gap. So that's how it goes. Even here, look at this macro that's coming up. There was also a nice long from here. The 450 to 510 macro, right? Didn't work out. And then this one here, right? 15-minute fair value gap. Each macro is an opportunity. So if you go back in your charts, look, even like this, mark out, let's just stop this for a sec. We don't want to go into Beam. You can tell I'm into crypto, right? Well, I am, but let's go back to the NASDAQ and we'll stop this up. You're going to take losses, right? So you're going to take a loss here, take a win. You're going to take a win here, but then you might trade this macro here and you take a loss. It's going to happen. Probability is just randomly dispersed, right? This is a nice little continuation play in this macro. So there's opportunity, right? And that's where I want to leave that. I take losses, I take wins, but you have to accept that. Don't think just because you take a loss that you're wrong completely. You could be, right? You could be, but not necessarily. Not necessarily. And that's probably a big learning curve for me and a lot of people. A lot of people take a loss and think it's the end of the world. It's not that deep. You got to have that resilience. You take a loss, it's just a part of the probability. You take a win, it's a part of the probability. You take a break even, it's how it is. And by data collecting, you're going to have confidence that the next trade or the trade after is probably going to be a winner. If you know what your win rate is, if you know how many losses you've taken in a row, you'll know what to expect. Like, yeah, you might collect data that says, look, you can take 4 losses in a row, and you might take 6 one time. Yeah, it could happen, but probability says if you've taken 3 losses in a row, and your system says only 1 or 2 times you've taken 4 in a row, well, there's a higher chance that you're going to take a winner. It's just how it is, right? So you've got to have data collected to have that confidence. That's really important. So that was a bit of a long 1-7, but London session, those 2 macros. Asian session, it just depends on where the market is and how much it's moving, because based on how the market opens, I can tell a lot about how Asian session might be. So if you have a look here, look. Here we have 6 o'clock. We move a little bit, which is nice. So that first 40, 50 minutes is quite nice leading into that first macro. But sometimes the market opens like this and it has all this accumulation. I don't want to trade Asian session there for a little bit. So I'll wait, I'll wait maybe an hour, 2 hours. And the same goes for London. Some Discord calls I'll hop on with the premium community. I'll hop on at like 1:40 a.m. But other times it's just slow. And I'm like, nah, I'm not engaging in a slow market. You're either going to get chopped up or you're going to be waiting 40 minutes to either get a break even or stop loss, which you don't want that. You want quick wins, quick losses, which to be honest is why I think a lot of people prefer New York session. Most of the time, if you're right or wrong very quick. And so a lot of people struggle, myself included, going from New York back to London because it's different. You might have to be in a trade for 25 minutes just for it to move 15 points. But that's just how it is. And there's a way to do it. You can trade it, which is fine. I've been trading the 350 macro for some months now. Cool, that's good. Stoic trade, that's good. And I've had a few people message me from across the globe, like Europe, even Australia, because where we are now, the market, when I hop on the call, it's about 4 p.m. most people, even if you're a tradesman doing construction, you're still at work or just got home. If you're in a corporate business or corporate job, you're definitely still at work till 5 o'clock, right? 9 to 5. So for those people, and if you're trading from somewhere else and you're like, I can't trade this session, you don't necessarily have to trade kill zones. You don't have to, honestly. You can trade macros that are outside of kill zones, but don't expect to get trades every day. And I think that's a big part. Like a few people say, oh, I can only trade, an hour a day. Well, that's fine, but don't expect to trade every day. You might trade twice a week, and that's just, you've got to accept it. You know, you've got to accept the conditions you have and also your circumstances. There's nothing wrong with your circumstances. You just got to accept it and roll with what you got. That's the main thing. Steve, basically lack of sleep. I've done it all night at once and was wired for 2 days. Yeah. Not good. Not good. Consistent lack of sleep as well is not good. And then you make worse decisions. Then it came to a point where I was trading where I was almost forcing trades because I just wanted to get it done. I was tired. I wanted to have a nap. So when I trade London, I was just forcing setups. I'll just take a trade because I'll just take it for the sake of it, which is not good. You want to be focused. You want to be neutral. You don't want to feel like you got to take a trade just because it's a session. You got to trade just for the trading, not to make the money. Like money comes as a byproduct. 7, and I'm going through the questions now, guys. So I'll keep answering these. That was from Friday. All right, cool. So 7 says, what would you suggest if someone got a payout but is now struggling to get consistent with taking payouts and struggling with boom and bust? Yeah, a lot of people, including myself, when I started, I was like that too. I think the money gets to your head, or it got to my head, and you think, I'm not saying it's you, but I thought I was the best in the world. Oh, I've got this, this payout. That's how I thought. Everything will be smooth sailing now. And then unfortunately, for most people, again, myself included, after some of the best months I've had have come some of the most dry months. And I think the reason for that is just psychology. Now, in order to not boom and bust, I like the idea, and I do this quite frequently. After a big month, having a few days of just cruising, or having a few days where I'm not trading a funded account, I'm just trading evals, and that lets me rebalance. So that way, when I go back into trading the funded account, I'm more neutral level headed. Now, because on these top steps, for example, I've just been taking base hits, I'm okay trading almost every day, if not every day, because the money for me, and it's just for me personally, psychologically, I'm okay with it, with risking the certain amounts, making the certain amounts. It doesn't fluctuate my emotions that much anymore. And you build a tolerance as time goes on. So boom and bust is common. Potentially rushing the process or trying to top what you got last month. And that was a big thing for me last year, trying to top what I got last month. Like even this year for me, for example, right? Some months have been 1,000. Some months have been 8. Some months have been 6.5. It's varied. And it'll be varied based on a few factors. How am I performing? The market conditions, the volatility. How many sessions do I trade? How many accounts am I using? Am I, trading one session on 2 accounts, or am I holding trades longer? So it'll be varied. And that's something that I realized, fairly early on, but it took me quite a few months after getting my first payout to realize that not every month's going to be the same. It won't be the same. Some will be better than others. You don't have to try and top every single month. Obviously, long term you want to progress, but doesn't mean, say someone made 6.5K this month, doesn't mean next month you're going to make 15K. No, it doesn't mean that. If you do, great. It just means that over the year, you should get to the end of the year and go, look, I've made money, and I've made more money as a consistent trajectory, not just every single month on end, because eventually you're going to burn out, you're going to boom and bust, because you're going to be trying to push for that next the next target. So what I suggest, take a couple of days, if that's what you've been doing, like taking a payout, busting. Take a couple of days, get back into it. If possible, have more than one account. And that way, if you do take losing trades on a funded, then you can always work on another eval. Ideally, have more than one funded, because it really allows you to spread your risk and allows you to respect risk management more. Everyone's got urges, everyone's got tilt factors, everyone's got fear, everyone's got greed, but different levels of it and different ways to manage it. Big way for me is base hits, and a big way for me is having more than one account. I know if I take a loss on one account and I go over my max loss for the day, it doesn't matter. I don't feel the urge to trade on that account because I've got other accounts I can trade on later on in the session if I see something. But for me, when I only had one account, I was more prone to boom and bust. I was more prone to doing silly things because it feels like that's the only account you can trade on. And psychologically, for me, I find it easier spreading the risk. So everyone's different. Some people like to copy trade and they just do that. But that would be my advice. Those things, 7, that would be my advice in terms of what I'd be looking at. So hopefully that helps. And also accept that you're going to lose accounts. I've lost accounts before. I've taken payouts, lost accounts many times. So it's going to happen, right? So you've got to have that resilience to you, but then also get down to the root cause. Can you tell me what the difference is between collecting data and journaling? So let's do it. I'll do a brief overview now, and then I'm going to make a video on this. So collecting data versus journaling. I'll talk about this maybe for 2 minutes, 1 minute, and then we'll move on. Journaling, for example, is, taking a screenshot of a trade and saying, something like this. Journaling would be this: taking a screenshot of a trade, marking this out, annotating the chart, and saying, entered off something like this. Entered off inversion fair value gap during the macro. Good impulse, low resistance on the buy side. The target. Quick macro trade. And you can even put maybe some of your emotions in there too. But you're annotating the chart, you're taking a screenshot, you put it away, and that's journaling. Data collection, journaling is a part of data collection, right? But it's not the only part. It's such a small part, because if I just screenshot that and go, oh yeah, great, and put it away, all I'm doing is looking at patterns. I'm not looking at statistics. I'm not looking at the relationships between patterns. That's the biggest thing. A lot of people are just pattern trading, and they think that any inversion fair value gap will work. It's not the case. Any macro will work. It's not the case. But how do you decipher that? You have to go back to all your screenshots. This is data collection. Actually collect the data and analyze the data. Look for patterns. Like, you're going to see this structure that I've just drawn out here play out multiple times throughout the month. But are you going back and checking that? Are you going back to the sessions you trade and seeing how many times it plays out? Are you going back into the session and seeing, how many times you got stopped to break even in the week? Are you going back to see if you could have re-entered a trade? Are you going back to see if you could have mitigated your stops more? Are you going back to see when price and why price decides to run? Why does price run heaps here? Well, based on my data collection and looking at patterns, it's because it's a macro and it's because there's all this low resistance liquidity. But you won't know that. If all you do is collect a screenshot and journal, if all you do is that, you're going to see price spool up and all you're going to think is, oh, great, the trade moved quick. But you need to know why, or you need to have reasons why the trade moved quick, why it didn't move quick, reasons why things happen. That's my short answer, but I'll get more into it. I'm making a video. But yeah, that's what I'd say. Jacob, have you compared Asian versus New York session? Any different win rates? Well, to be honest, these two top step accounts, 95% of my trades have come from Asian session, and the win rates are sitting at about 67 to 75%. Actually much higher than London for me. But there's a big reason why. I've been taking less from the market. And I've also been mitigating stops differently. So I guess comparing New York to Asian session, or even looking back to London session, I still do trade it. Different market cycles, different seasons, different volatilities will yield different win rates, in my opinion. So for me, I could sit anywhere from 50 to 75%. That's what I'd say. So yeah, I wouldn't say there's any difference. I think with New York session, because there's so much volatility, there's a lot of ways you can make a lot of money in New York session very easily. More easy, like way easier than London or Asian. If you have the direction right, so many people in New York session will just take 10 points. Easy. Taking 10 points in New York session is like taking 2 points in London. It's nothing. But unfortunately, if I don't trade it, I can't do that. So that's another thing with data collection. if you're trading New York session, you're going to find ways to take your money and leave. Don't fall victim to people saying you need a 1 to 2. Don't fall victim to people saying that, one negative risk to reward trade is bad. It's not. You got to find a balance between everything. 1 to 1s, 1 to 2s, zero point 0.8 RRs. You got to collect the data, figure out what your average stop loss size is, and make sure your average winner is at least that size or greater, and you'll be sweet. That's what I'd say. But yeah, bit of a detour, but it's a good point. I got a free Discord, paid Discord, but join the free one. Right, join there. Suss out the community, have a chat to me, have a chat to us, and we mainly do the London session. Central USA, so work from 6 a.m. to 6 p.m. Outside of that trade then, if all you can trade is like an hour or whatever it is, that's what you want to trade and that's what you want to collect data on. But you can always send me a DM, join the Discord or send me a message or send me an email. If you scroll up in the chat, I'll post my email in there too. Send me an email. Steve, what's your take when daylight savings kicks in? I find there's a 1 to 2 week period during Asian London. It's not clear. We'll see, right? Because it's even things like this, Steve. Even, NFP, CPI, PPI. There was many months this year where those days in London session were actually pretty good. But then recently they've been very choppy like it used to be. So I'll probably just, trade on the side of caution. In terms of when I trade, I'll probably more be willing to trade in Asian and earlier macros because the session for me would start, if I traded from London Open, it'd be 6 p.m. to about 8 p.m, which, yeah, that's probably pushing it. So I'll trade at the same, Steve. I'll just see what the market does. And if I have to take less, take less. If the market's more choppy, then potentially, trade maybe a little bit later. We'll see. But we'll just see what the market wants to do. Do I average in a losing position for reversal? No. It's not sustainable. You want to add into your winners, not into your losers. So say in this example here, say you enter here and price pulls back, I wouldn't enter again. Like, yeah, you get a better feel, but a lot of props don't like that. I know Top Step and My Fund of Futures don't mind, but a lot of props don't allow you to do that. I'm pretty sure Apex is one of them. You're better off averaging into a winning position or just staying in one position and then pyramiding in as it plays out in your favor. And that way you're on side with the market. You should put risk on when the market's showing you that it wants to move in your favor. Put risk on there, but don't put risk on when it's going against you, in my opinion. That's just me. That's how I like to roll. Michael says, is there any other trade on the phone? Do you have any tips on how to trade on the phone better? I mean, many times I don't see the patterns or overall shape of the charts on the PC. It's going to be tricky, but it's not impossible. It depends also what phone you got and how big the phone is what I'd say. What I'd probably say there, Michael, is say an example like this, right? You're going to have to start on the higher time frame chart. You're going to have to start like this. And say it's London session, you trade or Asian, you're going to have to start on the high time frame chart and mark out different, fair value gaps and ranges. So for example, say you're trading the London session. Start on the 15-minute chart because then the candles look easier to see. The 1 minute chart, you're going to have too many. So start on the 15-minute, right? And then say you're here and you start to push up a little bit. Then go down to the 1 minute. When you start having a little bit of impulse on the 15-minute candle, then go to the 1 minute because you already know what you're looking for. So the 15-minute can allow you to plan the trade, and that's where you can start on the phone. And then from there, obviously look to take a trade in the 1 minute. I mean, I don't know what your circumstances are. If you've got libraries, universities, they might have computers that you can use too. If you have the ability to connect to a TV, even potentially, if you got a TV or a screen or something, you can connect your phone to that. There's potentials, but if you just have to use your phone, that's what I'd say. Can you give the rules and steps for your strategy? Yeah, I think the best way to do that is to have a look here, right? Have a look here. Have a look at this. That's literally, it's in the Discord, right? But this is literally the way to trade. It's just a flow chart, and I've got a checklist in there too. Ask yourself if we're in a high time frame fair value gap. If we're not, then do nothing. If we are, then ask yourself this point. Then ask, does price do this? If we do, then you trade towards it and you repeat the process. So this is a summary. It's probably the easiest way to put it in terms of my my steps. And same in terms of the criteria. That's what I look for. So that's the criteria I look for. Checklists, right? We can get that up. So we'll open up this checklist too. This is a checklist as well. So this is what I look for as well. These things. Macros, SMTs, sweeps of liquidity, OT, premium discount, delivery from a fair value gap, impulse inversion, and low resistance. And out of these things is what? 1, 2, 3, 4, 5, 6, 7. If you've got at least 4, it's a decent trade. If you have 3, maybe not. If you have all of them, well, it's a no-brainer. You should take the trade. And if it works, it works. If it doesn't, it doesn't. But yeah, these are all available for free. It's in my free Discord. You check them out here. And we can apply that to the charts. So, yeah. And Sean, I'll be making a video on that very, very soon. But I did talk about it earlier in this live stream. So if you watch a little bit earlier, or you watch after the stream ends, the main difference is journaling is just screenshotting and writing. Collecting data incorporates that, but you've got to analyze the actual data for patterns. You're like a scientist, essentially. Vikram says, any tips to get out of greed? Greed or fear, it could be. Greed or fear. I was positive in Asia and gave everything and hit loss in New York session, yeah. Ask yourself this, and I can answer for myself when I had these moments, right? Why was I greedy? Because I wanted to make money. Why did I want to make money? Because I needed the money. Straight away, from assessing that from myself, it's because I'm trading for profits rather than for the process. The solution to that, you go, well, how do I fix that, right? The solution. You have to literally rewire your brain to trade for the process instead of the profits. You literally have to say to yourself over and over again through repetition until it becomes a subconscious thing that you're going to submit to the time. If it takes 10 months, 2 years, 3 years, you're going to submit to the time. You're going to be happy to, pay a tuition if you need to, and you're not going to be concerned with the outcome if you're moving in a trajectory that's up. Because I think a lot of people put pressure on themselves, including myself, and you think that you're going to make it within a couple months. Some people do, but very rarely. So a lot of times for me when it was greed or even fear, it was fear of losing money. Why? Because I didn't want to buy another account. I had to wait another 2 weeks until I didn't want to do that. Because in my head, if I lost this account, I couldn't get another one. So fear, that's that point. But to fix that, you've got to trade within your means, or I had to trade within my means to fix that. To fix greed, you've got to completely rewire your brain. Stop looking at social media. Stop looking at people saying, I made 20K in a day. Who cares that they made that? It's not you. And it's not me either. So you're in your own race. And as long as you're progressing, you're progressing. Choose a prop firm that allows you to lock yourself out. For example, Top Step. So that way, once you've traded Asian session or London session, you lock yourself out. You cannot trade again. And eventually you'll build resilience, so you don't need that feature, and you'll be able to, move forward. So that's what I'd say, Vikram. So hope that helps. Michael says, I'm at work, and on the way to work, I'm able to trade London. Yeah, I'll just do it on the phone then. Mark out your key levels before you leave, because obviously if you're driving, you don't want to be doing that. And then that way, when those key levels get hit, like 15-minute fair value gaps, or we sweep Asian lows or Asian highs, then you can zoom into the 1 minute chart. Then it'll be easier to take a trade, and then simply look for an inverse and see how you go. Can you show it live again? Do you mean like go live stream into the markets, or I can do another live stream? That can happen for sure. It can happen for London. It can happen for Asian. It could happen for New York, but probably not for a bit. I'm recovering from a pretty big injury. A torn ligament on the ankle, so I want to get my sleep. But in the future, maybe I'll stay up late for New York. But at the moment, I want to try and get as much rest as possible. Ed, can I show an example of low resistance? Yes. So to put simply, low resistance liquidity, there's two ways to find this. An easy way is to look for this. An easy way is to look for accumulation pockets. Another way is to look for trend line liquidity. Another way, and there's different ways, right, is relative equal highs or lows. So let's talk about all three. And we'll start on the 15-minute chart. But just know you'll be able to find this in all different time frames. These two highs here, relatively equal. So that's this one. You can see our price trades through that quite aggressively. This is trend line liquidity because you can draw a trend line and price pretty much bounces off that. So we trade through that quite aggressively. Equal highs, trade through that quite aggressively. And go back in price, go back in time. This is also trend line liquidity. So we break through that very quick. This is also trend line or low resistance. Those are just alternative names that are used, but they're all low resistance liquidity forms. And all that means is you expect price, as it's done here, you expect price to move very quickly. Look how quick that moves. Well, look here, we form all that trend line, and then what do? We move very quick. Right? We form all this liquidity under here. We move very quick. We form this liquidity here. We move very quick. We form this liquidity here. We move very quick. So these are the types of liquidity that I like to target. And I like to target these on all time frames. So I like to target these on the 1 minute, the 15 minute, because look, even here, for example, and it'll come from a matter of charting this out. And this is why you got to collect data. So if you don't know a concept, so if you're asking that question, right, about low resistance, Ed, my advice for you, Ed, and anyone else, it's like, I don't understand low resistance. Look back at what I just did, look back, and then literally collect 50 examples of what I just said. 50, at least. If you don't do that, you're doing yourself a disservice. At least 50. Do 50. And observe how many times out of those 50, price moves very aggressively to those areas. And you'll find it's probably 70 to 80% of the time. That's what I'd say. Michael, all good. Appreciate the feedback, and we'll talk probably next week. Next week on Sunday's live session. Got a few Michaels here. Michael, premium discount, you're checking on the day range or drawing the last big. So for premium and discount, I like to just use the 15-minute chart. Right, so let's just remove all this to start. Let's go back onto 15-minute chart. I like to use the 15-minute chart. We can go back in time too. Look, we can go back in time. The process applies. Look, even in a trending market, you'll see the market step up, down, 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 step up. So in a trending market, I'm looking for those pullbacks. I'm looking for that. And so each of these pullbacks, look, you can do Fibonacci's. I don't want to do confused too much, but I'll do it anyway. If it doesn't make sense, let me know. But look at this, right? Even we'll start from the bottom. Look, we'll start from the very bottom pivot. We'll start from all the way down here. Boom. Now, the market is only going to look at the market, right? It's only going to do two things or three things. It's going to rebalance a range. It's going to tap into a fair value gap, or it's going to sweep liquidity. And it can do all three things at once. So I want you guys, as I'm going through the market from bottom to top, to see what happens, right? Every time we pull back, we do one of these things. Guaranteed, 100% of the time. But our job is to figure out how to be on side with that. So the market reverses. When we pull back, what do? We pull back into a fair value gap. Great. Cool. The market comes up again. When we pull back, what do? We sweep liquidity. What else do? We also tap into the same fair value gap. So notice how sometimes the market engages liquidity and sometimes it does both. If I was pulling a range, and we can do the range too, this is the range high and this is the range low. It's the same thing. I'll grab my fib, swing low, swing high. What do? We pull beneath 0.5. Now, there's micro movements and there's major movements. There's micro movements and there's major movements. The market pulls back here into this fair value gap. The market pulls back here into this fair value gap. The market pulls back here and it sweeps liquidity. Again, same pattern. It sweeps liquidity and it taps into this FEG. Interesting. Very similar. And how would I pull a range from this area? Well, the highest high, I believe, is up here. So what I'd do is this. Swing low, swing high. Interesting. So as you follow the price up, okay, the market pulls back down. And do this. This is a good activity. Go back. Look at every pullback. It pulls back down. What's that pullback do? It sweeps sell side. What else does it do? Look, there's a range. There's a range now from this swing low to this swing high. What do? We pull beneath 0.5. All right, cool. We keep stepping up. What's the market do? It pulls back into this fair value gap. It pulls back into this fair value gap. It pulls back into this fair value gap. So notice here the process repeats on a small scale, but also on a big scale here. We pull back, we sweep liquidity. I think we just missed this gap, but there's two gaps, or we just tap into it. Look at that. It's the same thing. So what we see here, how we pull back and then we sweep sell side, it's exactly what we saw down here. And you'll see that in any market. The same thing happens here. So there's a bit of a long-winded response, but it's an important thing in terms of market structure. So hopefully that kind of answers your question, Michael. The 15-minute, I draw premium discount, but you can zoom in. You could zoom in, like, for example, let's just go back here. When's this from? September. Let's zoom back in here. You could zoom back in and go into the 1-minute chart like this. And guess what you could do? You could pull a Fibonacci like this. You can use a big range to start and then a small range. That's perfect. What's coming up here? What's coming up here, guys? And again, this is a lunchtime macro, 11:50 to 12:10. I wonder what could happen. I wonder. Interesting. So we've tapped into this high time frame fair value gap. We talked about how, look, on the high time frame, that was actually sweeping liquidity like I showed you. Now this here is another example of a trade you can take. Look. Boom. Respect the fair value gap, pull back, trade higher. What's above here? Low resistance. What are these highs? That's low resistance. That's trend line liquidity. That's an accumulation pocket. So you're going to see these things repeat. It doesn't matter what session. You'll see it happen in every session. Not every macro is going to be a good macro. Like this macro here is not a good macro because we're already high up in the range. You want it to take longs down here or down here. Could you have taken a trade? Look, from this, yes. Could you have taken a stop out or a break even here? Yes, because you could have taken a long from there. Maybe your stop's below the order block. You wouldn't have got stopped out. Maybe you do get a 1-to-1. Maybe you're lucky and maybe you get a 1-to-1 and you're out. But maybe you're unlucky, all right, and you get stopped to break even, or you have to sit through this. Very painful. Very painful. I could appreciate that. And then eventually it does move to your desired target. So yeah, that's how I like to use dealing ranges. Bit of education there. Which is the best session to trade? Whatever session you can trade. If I had the choice, like if time wasn't a factor, like let's say every session was accessible, I'd probably trade New York, but I'm not in that position. So there's no point in me wishing and hoping because I'm in Australia, right? That's my circumstance. And I don't mind sometimes, to be honest, because I can trade Asian session, be done before lunch. I don't mind that with my personal trading, and then I can enjoy the day. I don't mind doing that, to be honest. Can you show your strategy live again? Yeah, I can do it. We'll go maybe this week or next week. We'll do like a London session stream or something like that. London session, maybe Asian session. New York probably won't happen for a while, but could happen in the future. What's the secret to trading NASDAQ? I wish there was a secret. Depends what you mean. I mean, it's just about collecting data, getting a repeatable process, following the same process, following the same patterns, and trusting and having utter trust and confidence. Like, even if you're not profitable yet, you have to believe you are. If you don't believe you're profitable, you never will be. If you don't believe you can make money, you never will. If you don't believe you're going to win, you never will. If you always believe you're going to lose, if you wake up in the morning before you trade and go, oh, I don't want to lose today, you're probably going to lose. If you wake up in the afternoon or whatever it is for you and you've taken a loss and you say, oh, I'm probably going to lose the next trade, I can't trade, you are probably going to lose the next trade. You're programming your brain to not look for the right things. So you need to have confidence even in the struggle, which is so hard. It's painful. I know it's a struggle. Trading is a very tricky game. I'll make a video on that too. Like the reasons why a lot of people don't day trade. It's hard. People give up before they see success. People don't understand and appreciate the time that's put into collecting data for a strategy. A lot of people also can't look inward. They can't accept that they're the problem. I am the problem, or I am the good. Like for me and for you guys, right, listening, you or me, right? We are the ones that determine how well we trade. It's not the market. The market's not against you. If it's choppy and you decide to trade, well, that's your problem, right? Same for me. If I trade at all-time highs and I'm shorting all-time highs and I get stopped out, that's my problem. It's not the market. It's not the market's fault. It's my fault because I've chosen to press the button. And that's a big thing, right? That you got to learn as time goes on. Not pointing fingers at anyone, but if that sounds like you, it might be hard. It might be hard to accept that, but it's true. The strategy is only a small fraction. Then it's about implementing the strategy consistently, which takes emotional control. It takes emotional control. Any decision made out of emotion is not going to be good. And I mentioned this before, and I think last in a stream with my premium Discord, you relate this to an injury, right? When I injured my ankle, obviously adrenaline's pumping through the body. I'm in the bush, in a trail running, right? About half a K, 600 meters from the nearest road. I've got to go back up a massive steep hill. A lot of people would freak out. And a lot of people, when they're given stressful situations, the adrenaline makes them freeze or freak out. Other people, they fight it and they can come up with solutions. You want to be that person. You want to program your brain to be that person, which, not everyone is to start. And so I think trading has changed my mindset for real life as well. Like literally for real life. Things like that, situations like that, I don't really freak out anymore. Because trading has taught me that, look, if I freak out on my emotions, if I act too much on that emotion, I'm going to do something silly. And it's quite interesting, but yeah, psychology. Yeah, that's what I'd say, Michael. Practice it, collect at least 50. At least 50. You can even send me a message or send it in the Discord. At least 50. You need at least 50 or more. And then with those 50, if you want to make your life easier, we can give it to ChatGPT. If you've done good enough annotations, it can analyze it for you. But I'd recommend just doing it yourself and then go from there. Right now in Australia, it is 9:51 a.m. in the morning. So I know if you're from America, it's probably Saturday. For us, it's Sunday. Nice weather here today. We had nice weather yesterday, 29 degrees. Today we're looking at about, I think, 24, which is quite nice. And it's sunny today, so it's beautiful. Still spring for us, but it's quite good. What helps me determine shorts? It'd be the same as what helps me determine longs, I reckon, John. So here's the thing. I'll draw some stuff out, right? I'm going to keep answering the questions. Keep posting them. I'll answer as we go through. If the market's done this, I'm looking for shorts. If, and it's a big if, price reacts from a fair value gap up here. So that's a 15-minute FEG. That's Asian low. That's low resistance down here. There's equal lows down here. If the market on a smaller time frame starts doing this, I'm in shorts. Inversion, fair value gap, macro. If that's a macro, I'm looking for shorts. Simple. We pull back down in the range. We've got liquidity to target. I'm looking for that pivot. And the thing about trading ranges, which I really like, you don't have to be 100% correct. I could take a short and price may only come here and it still might reverse, but I've taken profits. And if price decides to spool down, great, I'll take more money. So my strategy and my models, I don't need to be right for the whole thing. I don't need to predict. I don't need to worry about, is price going to sweep the previous day low? I don't care. All I'm caring about is, can price deliver a target that would yield a profit? Can price deliver a target that would allow me to go to break even? If the answer is yes, I'll take the trade. If the answer is no, I'll wait. So that's a very typical entry model for shorts. Something else that it could look like as well, John, is maybe this here is Asian session. Asian session does this. I'm looking for shorts. I'm not going to continue the trend once it's been going up for 5-6 hours. I'm not looking for that. I'm looking for price to do that and then take a short to move lower. And hopefully, again, there's a higher time frame fair value gap that price bounces from. So the market really, and I've made a few videos on this, but the market really, in terms of structure, it either does this, it ranges, which I like those days, they're really nice. It ranges. Number one, it trends, pulls back, but then keeps trending, pulls back, keeps trending. Or it just trends down, like it trends up or trends down. In these situations, I like trying to take trades from the bottoms. Or if this is a higher time frame fair value gap, I short into that. In these situations where, let's remove this, where it's a range, when the market's moving, ranging, if there's a higher time frame fair value gap here, I'll short it. If there's a high time frame fair value gap here, I'll long it. And if that's in OT, I'll long it, I short it. And that's all I do. If we're halfway up the move, I just leave it because it's too risky in a ranging market. If the market doesn't pull back, I don't care. Like if the market, for example, does this. Say you're watching New York session. Sometimes New York session will accumulate, then we manipulate. And say I watch the market and say it's up here and it just keeps doing that. I don't care. I'm not entering off that. Nah. I'll miss the move. I want to catch the move down here or here before this liquidity is swept. Once that internal liquidity is swept and we just keep going like that, nah, not interested. Everyone's different though, so that's just how I trade. How many years took you to find profitability? Well, it's a process. So I started in May 2023. So if you want a timeline, I started learning in May 2023. My first payout was, I think it was in Feb of 2024. That was my first payout, and that was with Apex. Then Feb, March, April, May, I used Apex, and then I found out about Top Step. So on these months, I was getting payout month, between 2,000 to 4,000 US, sometimes a little bit more. Then I think it was about July or August, and I did Top Step a couple months there. I was getting consistent payouts. And then I think at the end of the year, I moved to my fund of futures. It was about November, October. Then I had the milestone account. I got a few payouts there. December, same kind of deal. And I stopped trading Top Step. So I stopped trading Apex, stopped trading Top Step. Started this year. So if, Feb to like, say July, it was Apex. Then I found out about Top Step. I only use Apex because that's what the mentor that I learnt off, he told me to use and other people told me to use. But then I found out about Top Step, which was much better. July to maybe October, then I was with Top Step. Then I did October, even to now, with my fund of futures. And now I'm like more focused on my fund of futures and Top Step. So here's the thing. Yeah, in these moments, I'm still having to manage psychology and still managing things. And yes, there's still days where I still have to control my emotions. And if I'm not careful, things could go wrong. But I think what happens over time, who asked this question? 7 years. What happens over time? I think after about a year, so probably May last year, I really started to properly appreciate accounts a bit more and risk management. It's not to say I wasn't making money and profitable, but I think as time goes on, you appreciate a little bit more, and even more so now. Like when you actually give yourself the chance to have a good streak, when you give yourself the chance to get the payouts, when you give yourself the chance to be consistent, then you appreciate it more. But if you don't give yourself the chance and you stop following your rules, then it's really hard to appreciate, I guess, proper risk management. So it took me, June, July, August, September, October, November, December. It took 9 months to get a payout. Did I pass accounts before that? Yes. My first account was actually Top Step, but I blew that in 2 days. I've told that story a few times, right? I blew that in 2 days when they used to have not Top Step X. They used to have just a normal platform. And it was a 50K account. And yeah, I lost it. $1,000 in one day, $1,000 the next. And the worst part about it was an Asian session. And it was within the first 2 hours of the day. I just over traded. I was just thinking about the money. And the account was see you later in 2 days, which is very painful. Before that, I traded with different firms. So my Forex funds was the first firm I actually traded with back when they existed. Not anymore. And there was a few other firms which they cost quite a bit of money, and they were mainly CFDs firms, not futures. So they had two-phase challenges, a little bit different to what Top Step is. And maybe that progressed or made it take longer for me to succeed. But I think don't think that it was just like 6 to 8 months and then I got a payout. There was a lot of struggle in that. A couple $1,000s wasted in that process, right? And after a few payouts, I made that money back. But it's painful when you lose money. When you pay your tuition to the market, it's very painful. I don't come from a place where money is endless. I had to work for it, and like a lot of people, when you blow an account, I would have to wait until my next pay. And that made it really tricky because obviously I was trying to make money, and we talked about this before. I'm getting into trading to make money, but then I'm not making money, and I'm spending the money that I could be saving from my job on accounts. It's a very dangerous cycle if you can't get out of it. And what I'd recommend to anyone is limit your downside. If you can only spend $100 a fortnight or a month, that's all you can spend. Put the other money somewhere else that you can't touch it. If you're going to be that tempted to touch it, put it somewhere else. Give it to someone that you can trust. Right? Whatever works for you, put it in a term deposit. We have that here in Australia, which is it's like an interest savings account. You can't touch it. Right? Put it away. Invest it somewhere you can't touch it, right? And that way you're only going to spend the money you can afford to lose. And that way the process is not going to be as stressful because there's a lot of stress. Because I'm trying to make it work. I'm working full time. I'm working overtime, right? When I started, I'm traveling for work. I'm getting 4 hours sleep and teaching a class because I'm a trainer. Like I'm a teacher. That's what I was doing. I used to teach construction, first aid courses, family business, right? And it was stressful. A lot of pressure there, trying to help out their business, trying to, pull my weight there, and then trying to learn how to trade. And then telling people that you know how to trade is not a good idea. I wish I never did that because then people ask you, oh, how's it going? How's it going, Ruben? Friends, family, you're making money? Because that's all people think about. You're doing this venture, they do a bit of research. Oh, I'm making money from day trading. They're going to ask you about it. They're going to ask you if you made money. And trust me, when you don't and when you weren't, and when I wasn't, it's very painful mentally to talk to people about it. And it kind of impacts your performance too. Because then you've got the pressure of people telling you and asking you, is the money coming in? Are you making money? And you've got to say to them no. Or you got to lie to them and say, yeah, it's going all right, which most people do. But deep down you're not making money. Deep down you got to work on things. And it's going to be very hard because then you're going to force trades. You're going to force trades to make money to get yourself out of that situation, which does not work. Just take it from me. So that's that. What's good? What's good, I show? What's good? Yeah, I know you, Michael, from the Discord. Yeah, we learned together, Michael. So you're the OG. You're the OG. But even send in the community chat or even, the question and answer channel, Michael, if you're still here, post it in there. Because I think a lot of people will actually appreciate that too. Do I take trades from equal highs and equal lows? If you mean, say price did this, would I take a short from up here? If there's SMT, yes, I would. If there's a 15-minute fair value gap here, I may. But what matters is how much liquidity do I have to target. So I prefer not shorting at equal highs. I prefer not longing at equal lows. Have I done it? Yes. Why have I done it? Because there's enough structure to support that the market doesn't want to move higher or lower. So it's a bit of a trial and error. But most of the time I'd say no. Most of the time I'd say no. Explain support and resistance levels. Order blocks, mitigation blocks, rejection blocks. Let's do it. Bit of a crash course. The easiest way, right, to explain how the market moves from my understanding and what helps me, the market literally moves off support and resistance. Whether people want to accept that or not, that's up to you. Now, you can see I'm going to go back. I'm just going to go back to a random time. I don't know. Let's go back to June. You can see there's definitely levels where the market bounces, right? There's definitely levels where the market bounces on the buy side or the sell side. Most of the time, the market bounces, and I mentioned this before, it bounces from fair value gaps. It bounces after sweeping liquidity and or rebalancing a range. So in terms of support and resistance, you're going to find, and look back on your chart too, this is what I recommend. You're going to find that when the market pivots, it's done something. It's swept a low, it's swept a high, it's tapped into a fair value gap, it's come back into premium or discount. That's how I trade. I use those basic core market structure principles to trade. So in terms of support and resistance, that's how I see it. That's how I see it. I see it as the market finding support in fair value gaps. I see the market finding support or bouncing after sweeping liquidity. If it doesn't sweep liquidity, there's probably a fair value gap. If there's no fair value gap, there's probably a range that it's rebalanced. So we can mark out ranges. Rebalancing to me just means coming below equilibrium. We have to do one of these three things before pivoting. We have to. It happens all the time. In this case, we just rebalance. In this case, we sweep sell side. So that's what I'd say in terms of that. In terms of order blocks, mitigation blocks, rejection blocks, I don't use mitigation blocks. I don't think they're necessary. So I'm not going to discuss them. But if you want to learn about them, I would go straight from the source. I would go straight to ICT. Go to his core content. That's how I learned all the PDRAs. And he talks about them there. That's what I do. Order blocks, however, I do like them. I do like order blocks, so order blocks in a trending market, look, when we're moving up, anytime price closes above a single or set of down close candles, that is an order block for me. So for example, right, when price closes above this candle here, we form a bullish order block. When price closes above this candle here, we also form a bullish order block. And I use the bodies. That's just what I like to use. Now, I don't use order blocks and watch price trade into them and then trade off them. No, I don't. I trade off the creation of the order block paired with an inversion fair value gap. So for example, just as an example, this is the 15-minute chart. In this case, you form an order block and you form an inverse. That's really good, right? Over here, same kind of thing. We invert this gap. We come down. This candle, yes, it's an order block, but I'm also looking at these two because they're really impulsive when we close above those. When it gets messy, don't worry about it. You want to look at order blocks when the market is clearly trending like this. That's when you want to look at order blocks because order blocks should act as support. Again, that there is a bullish order block. That there is a bullish order block. Same thing. And when the market's trending down, right? Same thing, but it's a bearish order block. So yes, you can look for price to trade back into these things. Yes, and a lot of terms get used interchangeably. It's just an area. That's all it is, right? Order block. When it gets messy, don't look at that. Wait until it's a clear candle or set of candles and we break down from that and then look at that. Otherwise, you're going to be marking out order blocks all the time, left, right, and center, and you'll be like, what's going on? So that's how I'd mark them out for these two price swings. When the market reverses, again, where's the market reverse from? A gap after sweeping liquidity. Order blocks. And we can look at the same here. Order block. Order block, order block, order block, order block. Messy, don't worry about it. Trending market, order block. Right? Bullish and bearish. Order block, and the process continues. So that's order blocks for you. I've got a video on YouTube about those, but I would go straight to ICT. And if you want a video on that, let me know. I can make a video on different PDRAs, go into a bit more depth. But what's going to really help you to understand that for anyone is to look into that and collect data. That's what I'd say. For me, I'm a full-time trader. So I'd call myself a semi-full-time trader. I still help out my family business. So it's just us, me, my dad, my mum, my sister. Not anymore my sister. She's doing her own thing. So I've had to pick up the slack a little bit. And as people can appreciate, if you work for family or help out family, you kind of have to help out, right? So I still work there a couple of days a week, not anymore because I'm injured, and then I trade on the side of that, and that's kind of how I run it. And I don't mind doing it because it keeps me busy, right? So I teach at that job a couple of days a week. I can still trade. I make money from both places. I make good money from trading. I'm not bored, because most people I know are working. So, when I'm at home, if I'm not creating content, and now if I'm not running because I'm injured, it's not that interesting, to be quite honest with you guys. You get more freedom, but you need people to spend freedom with. You don't want to be alone with that time. That's what I'd say. How much have I made from payouts? That's a good question. I'll make a video on that. I could do some quick maths. If I think of last year, it's easily totaling 60, 70,000. If I did some quick maths. This year, I'm probably looking at about, this month's about 6. Last month was about 1,000-ish, 2,000. Net profit is what we're talking about here, because obviously you've got to account for accounts and whatnot. The month before was quite nice, 8. So this year is probably looking at about 20 so far, 25. So I'm not pulling in 10, 20K months. I never preach that, but I do preach that with what I do and with the systems that I teach, you can make a couple thousand a month. You can make 10,000 a month. I have, but obviously you got to account for fees, which is also another good video. I might actually make that. That's a good one, Michael, because I think a lot of people want to see that, and it's a good point because you've got taxes, you've got fees. Obviously, you've got challenge accounts you pay for. So even with one account that I was trading with the Top Step, yes, it cost me about 350 AUD to get it. You got to subtract that from the 3,500 I pulled out, right? That's what you got to do with prop firms. So, yeah, that's kind of how I roll. So at the moment, yeah, trading, working with a family business, balancing both. At the moment, just trading, and I'm kind of using this as an opportunity, to be honest with you guys, to scale up a little bit more. But I probably still will work with a family business for years to come because I enjoy it. Some people enjoy their jobs. I do, to be honest. But having a couple of days free, 3 days out of the week free to trade, to do social media, to do different bits and pieces, it is definitely helpful. But it wasn't like that in the start. So the start was the grind. The first 6 months was a real big grind. So yeah, that's kind of where we're at. On Top Step right now, cool. I've left Top Step. They aren't on TradingView. Yeah, I was like that too, Steve. I love TradingView. That's why I still got My Fund of Futures. I've gotten used to Top Step X. I still like TradingView. So I am. I'm with you there. Michael 7. Please check. Yeah, I'll check my email. If you want to send me an email, I'll post it again. If you can't join the Discord or you got a question, just send me an email, and we'll go from there. Michael. Yeah, all good. And just send me a message if you need to. We've got a few Michaels here. So Michael Miller, just joined the Discord. Look forward to learning. Cool. Happy to have you on board. Why price sometimes use the order block and sometimes the lower high after? So here's an important point. The market will repeat everything to some degree. And I don't annoy any person. I'm not trying to annoy people here, but you look back at ICT 2022 mentorship, 23, 24, 25, and look at what he's talking about now in terms of wicks. Anything can work. Some things work better than others. So in terms of your point, Rash, why would price sometimes use the order block, the opening and closing price, and sometimes the high and the low after? Or why do things change? Why is it sometimes it uses this, sometimes it uses that? Or why sometimes, even if you look here, why sometimes does price pull back into the order block and why sometimes does it not? There's different theories, like if the market is very heavy handed, you wouldn't expect price to pull back as much. But I don't even worry about that too much. I wouldn't worry too much. Like, just find a system that repeats, find PDRAs that you want to use. You're literally like an alchemist or a scientist. You're putting together different things together to try and make something. There's going to be trial and error. You're going to fail. You're going to lose money. I failed and I lost money and I got annoyed and I got frustrated and all those emotions that a lot of people face. But the difference is are you going to come up with solutions, or are you going to always think of problems? That will make or break the trader. That will determine if someone stays and, potentially finds profitability, or if they're very weak and they can't accept losses and they can't, accept the process, and you don't have confidence, then you're going to give up. And this is for anyone. So yeah, that's kind of a bit of a rant, but that's what I'd say. Yeah, I'm injured at the moment, so I've got a torn ligament in my ankle, unfortunately. I was quite into running, trails, halves, ultras, all the rest of it, and misplaced my footing, and off she goes. So a lot more time now, a lot more time. So a big goal of mine with trading is to scale, start copy trading, and go from there. But everyone's got a different goal, right? Everyone wants to make money trading, but it's going to take time. And so I'm happy with the progress I'm making. Some people might say it's not enough. Some people might say it's heaps, and that's okay. Like, I'm okay with that. But everyone's got their own goals of trading, how much they need to make or want to make to be satisfied. But I wouldn't focus too much on that for most people. So yeah, that was that. And they're good questions. Any more questions, post to me. I'm going to stay in for another 5-10 minutes, and I'll hop off. This is something we'll do every week. Every week. Maybe around the same time. Like, I know if you're from America, you probably can make these calls. If you're from Australia, 100% you can. Europe, I'm not too sure. It could be different time zones. So I might try and change that for people that, have different time zones and whatnot. But that's the reality of trading, guys. You know what I mean? I can definitely help. If you're looking to join the free community, start there first. Start with YouTube first. See if you can do it by yourself. Don't even join the premium if you don't want to. See if you can do it yourself first. If you need help, then consider it. Join the community for free anyway, just so you can get the checklist and so you can get this, right? And then from there, you can always do other things. There's heaps of information for free on YouTube, plenty. I think I do have a playlist, to be honest with you. I think I've got a playlist called ICT Macros, so you can look at that. And that's it. It's not, and I don't have a big community. It's not like, yeah, there's a few people there, but it's a very tight-knit community in terms of who's active, which is probably better, to be honest. Because some communities I've been in, it's too much going on. So I like the community that we got. The people are helpful, they're nice. We do get some people sometimes, but they're gone pretty quickly. If people cause any trouble, but it's all pretty sweet. YouTube will give you heaps. Like, there's enough on my YouTube to be profitable. There's enough. There is enough. I'll just look up all the videos I got on macros. I'd study the videos. You probably got at least 30 or 40 there, but study them, and then look for exactly the same things in your charts, and then get that A+ checklist from my Discord. That and that flow chart. If you use that, a lot of people are seeming to like it, and that's what I use. But I don't necessarily have the checklist. I just think of that in my head. But if you need the checklist, use it. Use it to your benefit. So that's what I say. 5:30 a.m. here. There you go. So maybe I can do this slightly later. Because right now it's about 10. Maybe I can do this in the afternoon. But then America time, it's a bit different. I mean, most people in the Discord do trade New York and London. A lot do trade New York, I've noticed. I personally trade London and Asian session, but here's the thing: if you've got questions about New York and London or Asian or PM, I can answer, because I've traded all the sessions enough to know how they work. Like, I could trade New York session next week and I'll be fine, or PM session, I'll be fine. It's all the same. It's just relative volatilities. Do I trade specific hours strictly? 8 p.m. in New York is not too bad. But if it's what is it, Saturday for you guys, then people are probably heading out and doing things, I guess, but not too bad, 8 p.m. Do I trade specific hours strictly? Yes and no. I mean, so with the Discord, I wouldn't say it's strict. We hop on anywhere from 1:40 to 2:40 a.m. New York time, and we stay on until we either have more than 2 losses or we have a win. So usually between 2 a.m. and 5 a.m. for London session, sorry. For Asian session, if the volume is good to start, I'll trade until I take, again, a max amount of losses or a win. And then if that's an hour, it's an hour. Sometimes it's 3, sometimes it's 4. But Asian session is quite a long time. Asian session is 7 till 12, well, from open till 12 a.m. So it's a lot of time. So typically, during the day for Asian session, I'll just loosely watch the price. I'm not going to like stare at the charts for 5 hours. No way. And I'll just mark out the fair value gaps, if that makes sense. But yeah, great questions, guys, and appreciate the subs too. Like if you're watching here, we've reached 8K. 8K, it's crazy times. I remember my first 1,000 subs back in, I think it was last year in January. It's just crazy how much we've grown and the continued support. And like always, if you got video ideas, post them through. Like I have plenty of ideas that are planned that are going to come through, but I'll consistently do polls to see what you guys are up to. I'll post in the community tab, and if you haven't yet, go and follow me on Twitter. I'll post there quite a bit. Free Discord. Again, if you have any issues joining that, just send me an email. The email is just above in the chat here. And apart from that, yeah, that's pretty much it. I mean, it's been good having a chat. We'll do this once a week, once a fortnight, every now and again. I may even go live once in a blue moon for London session, or maybe to review the session, so keep an eye out for that. But this will be pretty much stock standard, once a week or once a fortnight. You can kind of expect Sundays to have these from now on. That's the way I want to see it. Rush, did you mark an hourly fair value gap? Not really. Normally, I just use the 15-minute chart. I find with hourly fair value gaps, with daily fair value gaps, with 4-hour fair value gaps, they're too big. And when the gap is too big, it's too much time. It's too much time to wait to see if we react from that gap. Whereas 15-minute fair value gaps, as you can see here, it doesn't take long. If it's going to react. If the gap is this big, then it's going to take forever. With a 15-minute gap, it's very short in terms of time frame. So there we go. All right, guys. Any other questions? Post them in quickly. Gonna hop off in a minute or two, and this will be uploaded. So I'll put it straight away. It'll be uploaded if you want to watch back. If you've just come in, last say 20 minutes or something, feel free to watch that back. Coming into the future, this coming week, I'll make a video on data collection. A lot of people want to see that, and I'll probably do one on psychology and maybe an update on these accounts. So hopefully get another payout in a couple more days. There's different projects I'm working on. So I want to show people, like I've made videos on my fund of futures. I've made videos on Top Step. There's another side project I'm working on. I'll talk about more of that in next week. But I want to show people that you can trade on any prop firm and that you can trade in different ways. You don't have to be necessarily rigid. You can stick to what works for you. And yeah, so a good thing with higher time frame fair value gaps, use the quadrant levels. So, for example, even on the lower time frame gaps, if you get a fair value gap like this, any massive gap, you want to pull your Fibonacci out, or your Gann box or Garn box, however you say it, and you want to measure out the gap, right? You can mark out different quadrants. You can mark out these two levels like this. Price will usually bounce from those areas. Not always. You can also just do this, go into style and click the middle line. Not always, but a lot of the time will react from those quadrants. So if you want to do that, you can, right? Here we react from the 0.25. That's cool. And you'll see the same thing. So that's a good point. 7, really enjoyed it. Maybe next Sunday during the London session. Yeah. Most people in the Discord London session for me would be, what's it now, 10 o'clock. So we're looking at another six hours or so. Yeah, that's possible. That's really possible. Jasmine, can I mark on where I'll take the trade on one of those fair value gaps? Well, it depends what session. Jasmine, what session do you trade? Because we can look at an example maybe for that specific session. That would probably be the best way to do it. All good, Michael. Appreciate that. It's a long one. It's looking like about 4 months, but keeping active in the meantime. In other ways, doing a bit of weights. I'll go back to the gym when I can. It's just a matter of taking time. I mean, I've broken my knee, believe it or not, the other side. So I'm not new to injuries. I'm not new to recovery, but that was a long time ago, probably like 7 years ago. And I wasn't as active. So it's a little bit different. But yeah, Jasmine, let me know what session, and we'll go through an example. Ed, how much you think is a good risk for 2K? There's so many answers to that, Ed. There's so many answers. My question to you, Ed, would be, how new are you to trading? Have you passed an account before? Have you gotten a payout before? Those would be my questions to you to start. And again, I'm not a financial advisor, but I can talk about what I do. So Jasmine, in terms of New York AM, what I'd probably do, this live stream, if you're new to the channel, this live stream, it's recorded. What I'd probably do, I don't know if you're in the Discord or not, you might be in the Discord. If you're in the Discord, send me a message there, or there's a question I'll show you in the Discord. The link to that will be in the description of this video, by the way. There's this thing here, it says ask a question. Ask the question in there, because I think a lot of people probably would appreciate that question too. And so if you join the Discord, ask that question, right? Ask that question in here, and then you should be sweet. That's what I'd say. So I don't know if you guys can see that. If you can't, then all good. But yeah, New York AM session, I have traded it before too, Jasmine, so I know how it works. But yeah, post it in here, post it in there, get the question on in here, and then what I'll do is I'll respond to you there. So ask exactly the same question, and I'll go through a few examples. I'll post that for the community. So that's that. Thanks, Seven. Yeah, appreciate that. And Ed, same thing. If you're in the Discord, ask that question and we'll go from there. But yeah, we're going to cut it there, guys. It's been great chatting to you all. Again, honestly, appreciate the 8K. We're just growing massively. The last video, I don't know what happened there. It's just gone off. So that just goes through my last video. Just goes through, my process with Top Step. Just taking base hits. Nothing more, nothing less. And more videos will be coming. So, if you're a part of the Discord, if you're new to the Discord, you can just ask a question. You can post in there. It doesn't matter. You can send me a DM, right? If you have any video ideas. If not, I'll just keep doing as I'm doing. But yeah, great having you guys here. Enjoy your weekends. If it's still Saturday, enjoy your night. If you're from America. If you're from Australia, well, it's pretty good weather here. Sydney? I'm in Wollongong. So Wollongong is a city that's south of Sydney. I say Sydney because it's easier. So if you're from Australia, you know where Wollongong is probably. If not, you're probably thinking that sounds very weird, but yeah, that's the city or the suburb they live in, or the town, if you want to call it that. But yeah, all the best, guys. This will be uploaded straight away. If you're not yet in the Discord, join that. It's free. If you're not yet following me on Twitter, join that. It's free. And apart from that, we'll talk very soon. Relax, take the weekend, collect data, and I'm going to make a video on that very soon too. But with that being said, guys, let's call it there. All the best, and appreciate all the support. Have a great one.